Elon Musk's company Tesla is without any doubt one of the most popular stocks in the stock market. If you had invested in Tesla just 4 months ago, you would have been up 422% as of today. The stock has experienced exponential gains in the past few months, and it has left short sellers and non believers holding their heads. But that was in the past. We won't dwell too much on missed opportunities. We want to know what's going on with Tesla stock right now, and is it still a buy at nearly $1,600 a share? I've been researching stocks for over 3 years now, and I have never seen one as controversial as Tesla. If you talk to professional analysts, Tesla is hands down the most puzzling business on the planet. You see, Tesla stock is very, very unique. Unlike most businesses in today's world, profits and growth are the primary catalyst for stock direction. Of course, there are exceptions to this rule everywhere in today's hectic market, but nowhere do we see it as such a deviation from reality as we do in this company. The bottom line is that Tesla is in the business of making cars. To illustrate my point, here are the top 5 companies by market cap today. Tesla is the world's most valuable by a large margin. In fact, they're worth more than Volkswagen, Mercedes-Benz, Honda, BMW, and GM combined. To further prove just how crazy this is, in 2019, one company, Toyota, sold 2,085,235 cars. Tesla that same year sold 367,500. That's nearly 6 times less, yet Tesla is worth nearly 2 times more. Of course, there are arguments to be made on the side of Elon Musk. His company is innovative and groundbreaking, introducing affordable electric cars to the masses, but that doesn't change the classic fundamental analysis that breaks when looking at TSLA. One of YouTube's brightest finance minds, Dr. Sven Carlin, did a video in October of 2018 where he analyzed the stock and gave out what he believed to be a fair evaluation price. Here is the clip. Take a listen.
So let's put all of this into numbers. Let's evaluate Tesla as a stock. Let's say that Tesla hits their 1 million vehicle target in 2020. That is 30% of what Daimler is doing now, as they have both cars, Tesla Semi, luxury trucks, buses, whatever. Let's assume proportional revenues and earnings. 30% of 164 billion euros or $190 billion is 57 billion of revenue in 2020 for Tesla. With the same net profit margin of 6.6%, Tesla's profits in 2020 would be 3.7 billion. Attach a valuation of 6 to that, like Daimler has now, and you get to a 2020 market capitalization of 22 billion. That would give you a stock price of 130 in 2020 for Tesla.
As you can see, Sven was dead wrong. It's now 2020 and Tesla did not hit that 1 million car target, yet the market cap is over 283 billion. His $138 fair evaluation is off by over 1,000%. So if a PhD level analyst sets a fair price that is 15 times less than what it is now, what is going on with this company? The bull case on Tesla rests on sentiment, the EV future, and growth. Tesla is without a doubt a groundbreaking company that has disrupted the car industry. Everyone is playing catch up while they take off. EVs are the future whether you like it or not. There is a very high likelihood that most of the cars on the road in 10 years will be running on batteries and not fossil fuels. By being the first player in the market, they are set to capture this new reality. The demand for EV is expected to grow at incredibly high rates. In 2018, EVs represented only 1.9% of the market share in the US. This number is obviously going to explode. In December of 2019, countries like China announced plans to raise their EV targets substantially. As of 2020, China is hoping that 25% of all car sales by 2025 will be the electric variety. This is good news for TSLA, and others like it, such as the EU and the United States, will also eventually step up. Tesla will be there to fill that void. At $1,500, the price does seem crazy, but guessing where it will go next is next to impossible. As it approaches profitability and joins the ranks of some of the world's largest powerhouses, there is a possibility that Tesla joins the S&P 500, which would act as another catalyst in its run up to 10,000 a share. Have a listen to CNBC talk about this.
extra tough for that area. All right, let's move on. Talk about Tesla, because I do want people's thoughts on this one. Stock is up again, driving to new heights seemingly every day. Shares are up 47% in the last 2 weeks. And as of yesterday, guys, it's the 16th largest stock basically in America. Its good fortunes have investors wondering if it would join the S&P 500, Mike, which would be a huge conundrum to the funds tracking the index, right?
Yes, it will cause a flutter, and I do think it's a matter of when and not if. What needs to happen in terms of meeting S&P standards is Tesla needs kind of a cumulative four-quarter period of profitability. They have a net income standard to get into the S&P 500. What is unusual is how big it would be upon entry, as you say, Kelly. So it would be in the top 20. It's really not that common. Usually it's an upstart company. It's also getting very conspicuous, I would note, all this market value that's building up outside the S&P. Tesla's over $250 billion. Wow. And then if you want to add Spotify, Shopify, Zoom Video, all four of those companies together are more than $500 billion sitting outside the S&P. So it is going to be an issue. You'll probably have to sell down. All the index funds will probably have to sell down, who knows, 1% of all the other stocks to fit Tesla in there. And in the Reuters article about this, they mentioned the Yahoo entry into the S&P in 1999, which was a massive event. It was also very big upon entry. That also is considered, by the way, a little bit of the first stages of the peaking of that internet bubble, for what that's worth.
And that's, John, I turn to you. I mean, not to kind of have to make a call on whether this is the top for Tesla one way or the other, but short sellers are down $18 billion this year, $4 billion in July. I mean, the stock chart for Tesla, even over the past year, looks almost parabolic.
Yeah, I mean, this is, to me, is one of those be careful what you wish for situations. I don't think anybody, and even the Tesla bulls, are looking at it as some bastion of stability, right? And that's kind of what you think of when you think of the S&P 500 in general. I mean, there are people who either think it's going to go 10x from here or it's going to go down 90% from here in a lot of cases. So, and then you got Elon Musk himself. I mean, he's volatile and he's key to the stock. So I don't know. I wouldn't put this, and I know you weren't, Mike, in the same bucket as Shopify. I mean, Toby Lütke right. is a bastion of stability, certainly compared to Elon Musk.
Thank you guys for watching. Please don't forget to hit that subscribe button and let me know your thoughts about the company in the comments below.